And the end of that music means we are ready for another edition of Trade Masters. Trade Masters, a show where two expert traders with lots of experience come at each other with their best trade ideas of the week. And hey, listen, this is a tough market to do Trade Masters on today, right? So listen, I'm glad I am joined by two expert traders who have seen a touch of volatility in their day. Today's volatility isn't their first rodeo, and I am fascinated to see what they can make out of it. Joined tonight by defending champ Tyler Craig. How are you doing?
Oh, just enjoying my current belt. I go to sleep with it. It's in my bed every night. So I'm gonna fight for it, Greg. I'm gonna fight for it.
Well, the last time you lost that belt, it was to the gentleman from our friend from Canada, Mr. Greg Old Money Holmes. Greg, are you ready to do battle tonight?
100%, 100%. I appreciate Tyler keeping that thing warm for me, but that's all over now.
And what I love about like markets like this and nights like this is, listen, we've all seen volatility. Not everyone has, right? Not everyone has seen volatility. Got a lot of new traders out there. I'm fascinated to see what you have on a day where the VIX spiked 61%. I have a feeling there might be some credit in here a little bit. But let's get started. Tyler, as defending champ, you get to decide who goes first.
I'll defer to Greg. Bring it on, Greg. Go ahead.
All righty. Well, I got a bunch of different trade ideas. Let's start with credit. I got one from my buddy Mark here. Let's go to AT&T.
Nice boring credit. Like volatile market, go to the boring. I already love going to boring defensive plays in a volatile market. All right, yeah. What do you got going here?
Well, this one here, hold on a second. I lost the screen there. Give me a second. This thing's all gone haywire on me. What the heck just happened? Oh, there we go. There we go. Anyway, so this one today, I liked it because, first of all, earnings is done. It actually beat earnings. A little bit of a run up today. Obviously, the sellers came in late in the day. But look at the sideways action all the way from basically June until now. This is a covered call, naked put, credit spread, wet dream right here, this particular stock. And so looking at this one here, like I said, with the boost of on earnings there, a nice little support level right at the 28.50 there. If you want to go into the trade tab there, what I was looking at today was 28.26 as a credit spread, a bull put spread.
Feb or March?
30 days out. Yeah, 26th of February. Sorry, my bad. So the 28 and the 26, $2 wide credit spread. And you're looking at almost 30 cents there, 29 cents. So yep. Way better than 10% return on a great stock. And the reason I like this more is because you have options here. No pun intended, but this is one where if you decided, even doing a credit spread, if you decided if it started to go lower that you actually wanted to hold this as a position, you could close your long leg and get to assign the stock and then turn around and boomerang this thing as well. So this thing has a lot of possibilities. It's a cheap trade. It's $29 stock, so lower lower account sizes can participate in this, and yet your return is still pretty decent here.
And so, like, let's say it goes lower, and you're like, yeah, I'm in. Sell the put, get back that credit, take ownership. Is what
that's
you're
right. Yeah.
That's
really if you choose to. If you choose to. If you don't want to own the stock, you can just let it go. That's fine. But
no, I like it. I mean, a lot of times I'll just sell the naked put when I take ownership of. But I like in a volatile market maybe having that extra hedge in case things get really crazy, right? And then I have more time to make a decision. I like that. Yep. I like that a lot. All right, that's a good, strong, nice defensive play. Dividend stock, listen, I know everything's crazy in today's market. SPACs and AMCs and GameStops and all that. What's a 6-7% dividend yield on AT&T? Cash flow, not a bad defensive way to attack this market right now. Tyler, you're up next.
Oh, are we doing jokes? Are we doing jokes? Yeah,
of course
absolutely.
We're doing jokes. I apologize.
Absolutely. All right, a man was admitted to hospital today with 25 plastic toy horses inserted in his ass. Doctors have described his condition as stable.
Boy, there is an analogy for stock traders today on that one, to say the least. Enjoyed it very much. Tyler, you're up next.
Okay. Let me go back to your VIX commentary. People may not know this, Mark. This was the third largest single day percentage gain in the VIX ever. It's very, very uncommon to see the VIX go up 61% in a single session. What's incredible, Mark, is that the market was not down that much. You would think VIX up 61%, we sell off 4%, 5%. S&P was only down like 2%, 2.5%. So you're seeing a ton of fear, apparently, coming into the options market. And it is giving us some really good premiums across the board. I think one of the simplest ways to take advantage of this, if you think the world isn't ending, if you think that this market dip is ultimately a buy, I like going to the S&P and selling out of the money put spreads. This is a setup that we talk about in the Bear Market Survival Guide, actually. We call it the Fade the Fear trade. And from a timing perspective, I think that I would want to see some evidence that buyers are returning tomorrow. If we gap lower and this thing just craters, I'd probably wait. But in my experience, Mark, when you get a spike in the VIX like this aggressively, it's a contrarian signal. Usually you get some kind of rebound in the market in the next day or two. So because of the high VIX, I can go really far out of the money with SPY options, sell a credit spread, get a nice little 10% return. And so I was looking at the March 320, 315 bull put that closed today right around 60 cents. S&P is down after hours. If we really continue tomorrow morning, I think you're going to be able to go down like another $5 or so. But at 320, 315, you're getting 60 cents of premium. The probability of profit is about 85%. This is about a 15 delta right now. And it's like 14% out of the money. So this thing would have to get out of hand fast. We'd have to completely erase all the gains from the coronavirus Pfizer news. You'd have to completely upend that. We'd have to go back to where we were before the election, which I think gives you a pretty good margin of error. So to build out the trade, again, I'm going out to March. Feb options, I think, are a little bit close. I like the extra margin of error going out to March here, but looking to sell again the 320, buy the 315. I would massage this lower tomorrow if the stock sells off further.
So maybe
but
look
again,
at the 310 or 305 maybe, like, because
Yeah,
I mean, it's very common. Like you gap down tomorrow, and let's say it runs down a little bit in the morning, volatility is going to pick up some more.
Yep.
And you could probably get the same credit much lower, correct?
Yep, that is correct. But even at 320, and you look at this longer term, I feel like because of that VIX spike, they're letting you go pretty far away. And that's the whole appeal of fading fear or taking the other side of these people that are running out and buying puts. So the other thing I like about this is I don't have to worry about any individual stock news. I don't have to pick an individual stock. I'm just playing the entire market off of this VIX spike. So I think pretty easy to wrap your head around.
I like it. I like it. And it makes sense. And listen, not a surprise that both of these veteran traders come at ways to potentially play against the volatility, contrarian style, out of the money naked puts, different styles on both of the naked puts, giving some people something to think about. I like it a lot. Let's see if I like your joke.
What's the difference between a well-dressed man on a bike and a poorly dressed man on a unicycle?
It's the difference between a well-dressed man on a bike and a poorly dressed man on a unicycle.
Attire.
Nice.
Oh, not too bad. I enjoyed that actually. That's the best joke you've had in weeks, Tyler. I like that one a lot. All right,
Trying.
round 2. What you got for me, Greg?
Let's go to Oracle. We're going to go back to the credit spread well again here. Like I said, the volatility spike helps these things out a lot. You know, you look at this, we've got a beautiful uptrend here. We got higher highs, higher lows. We just came back, you know, found some support there at the 60. It's popped back up. It's above the 20, even closed, I believe, above the 20 today. What I like here is just a run-of-the-mill credit spread under that 60 level there. I like the support that we just got there. Like I said, with them, you know, it had a pretty good retracement there. It got below, I believe that's the 50 MA before popping back up again. So this one here, we're going to go a little closer to the money. I looked at a 59.56 for about 42 cents credit there. Was what I got, again, 30 days out. So if you look at the trade tab there, so again, February 26th, I always just go as close as 30 days. I was looking at the 59.56. Again, 42 cent credit there. So you're getting way more than 10%, which is beautiful. I just really like the pattern of Oracle. I love the fact that the volatility is spiked. I think you've got a really solid support level there. You got the round number of 60, and you've got it's already bounced off there once. Plus, you've got old resistance about a month and a bit ago. Just a nice little setup here. Nice little way to take in some credit on this trade.
All right, 59.56. Any specific like market action in the morning that you'd look for?
No, obviously, like right now, the bid and ask is saying that this is probably going to drop lower. If it does, obviously, we'd want more credit. I would like to see it return, you know, like keep going up, obviously, but I'm not really too concerned. We're above all the moving averages right now, so any pullback, I think you still got enough support there at the 60 that you'd be fine.
All right, good deal. Another, you know, just nice, solid credit play, way to play the market. Sometimes the directional, if you're not day trading, it can be a little topsy-turvy right now. A lot of setups got blown up, right? Credit spread's a way to attack the market right now. Let's see how you attack the joke round in round 2.
All right. I saw a girl crying, so I asked her, "Where are your parents?" And she started crying even more. Man, I love working at the orphanage. A little darkness there for you. A little darkness there.
Oh, listen, I got a dark sense of humor, so that one. Oh my gosh. Tyler, go ahead.
They can't all be lame dad jokes. You know what I mean? We got.
You know.
Yes, let's do it. Okay.
That's a Max Loss joke right there. Max Loss appreciated it quite a bit. Tyler, what you got?
All right. I spilled the beans on this one in Trade Masters earlier today. FCX has I think, very tempting pullback pattern here. Got whacked a little bit after earnings. This, if you look at this on the weekly chart, this has just been a juggernaut since the low. It's gone from $5 to 30. This is the first really significant pullback you've seen, and it's testing the 50-period moving average. You're coming into old resistance, has the potential to turn into new support. You've got earnings out of the way, so that uncertainty is now behind us. And it's a cheap stock. It's a cheap stock that works well for things like naked puts. Same commentary as Greg had on AT&T. It's also a pretty volatile stock that works to the advantage of selling options. There's a lot of premium. The cheap stock price also keeps your cost low. Your margin requirement is going to be minimal, so you can really generate some pretty good return on investments. So I was looking out to March. So in my situation, my preference is to usually use the monthlies because they're more liquid. Because the Feb 23 options don't really allow you to go that far out of the money, I have no problem punting out to the next month. So looking out to March here, Mark, I was looking at the 21 or 20 strike. I like both. If you wanted to go a little bit further out of the money, get a 13 delta, you can get 46 cents The collateral is only $200, so you're about a 25% return there. You're about an 87% probability of profit. If you're willing to buy the stock, your basis is going to be 1954, which is another $6 drop from here. This thing has to get really decimated to drop down to that level. So, you know, and I think, look, if this is going to be a real test of the whole reopening theme, maybe we get a bit of a correction, but I just can't see that whole thing going away. I think that eventually money comes back into these guys. It's just a matter of how much they smack them here in the short run. I don't mind getting this thing down around 19. I think you can sell covered calls and continue to reduce basis. It's a great cash flow stock. So that's it. 19,
No,
20,
and I mean, that
21
whole
clip.
theme, right? You know, reflation trade will probably have its day again. Listen, there's a lot of things I mean, when you get a big sell-off, and I want to ask you both this question. When you get a big sell-off or volatility spikes, do you like going to your goodie jar? I mean, how do you approach? I mean, what's the first thing you guys look for? Because the reason I ask is because FCX has been I've got called out several times along the way. I don't own it right now. And the thought of picking up FCX lower is very, very appealing to me.
Well, I think for me, I think you go to, if you don't want to think, you just sell put spreads on an index, right? You just say volatility is crazy. I think we're close to a low. You know, I just do an index. But if you enter an individual stock, you have a shopping list of all the crap you missed. All the really good companies you wish you bought. Now you're getting a second chance. And so I think the ones that maybe have shown the most recent strength or have the best fundamentals or have rebounded the best, those to me are easier to buy than dumpster diving in some dog that hasn't really participated. For instance, like cruise lines, right? That or airlines doesn't appeal to me as much because they really haven't participated as much as some of these other guys. So that'd be my take.
What do you go searching for, Greg?
Well, so I am a guy that's old money. I am always selling credit, like always. There's never a time in my portfolio where there isn't a lot of credit being sold. The beauty of these volatility spikes is I get paid more to do the same thing I always do. Now, what I do like is opportunities like Tyler just talked about here with FCX, or something that you're looking to pick up. I talked about this in the Traders Lounge the other day. I look at these earnings as opportunities, right? Like this thing just got beat down pretty good just before earnings here. And now we got a doji candle in there. We got a potential. It's sitting right on the 50 there. We got a very good potential that this thing turns back up. Well, you get to buy a $32 stock at the $25, or as Tyler alluded to, sell yourself a naked put, quite a ways out and just collect some cash flow. So you get the best of both worlds here. So like I said, I'm always looking for credit. For me, I get that extra bonus of getting more money for the same thing that I always do anyway. So really, you just pick your spots, right? That's what it comes down to. If you get good setups, I love, I build portfolios because I'm old money homes. I want those dividend payers. Well, if I get an opportunity where a company hasn't changed fundamentally, but all of a sudden they fell out of favor for whatever reason, sentiment of the market, they've fallen out of favor, and I can pick them up for a great price, or I can go in and sell a put or a put spread and collect a little bit of free cash to buy more stock later. It's hard to beat that. Setup, and I think you got to take advantage every time you have a chance. So
love it. Let's see if I love Tyler's joke.
Look, what's the scariest thing to read in Braille? Do not touch.
Round two was brought to you by the dark side of tackle trading. Jokes about Braille and orphanages. We are listen, we like to have fun, and we like to talk about stocks, and we like to teach education. Listen, this market is crazy, but there are fundamental principles that apply. There are techniques, and there's playbooks, and there's strategies, and there's things that can make you successful, not just blindly buying an audit money option when something's in vogue for a week, but from now, this year, next year, the rest of your life. If you want to learn to succeed in the markets long term, go to tackletrading.com, go to the store tab, sign up for a 15-day free trial. See if our education, see if our community, see if our group of coaches is for you. Tackletrading.com, go to the store tab. With that said, Greg, round 3.
All right. Well, I'm going to give a little nod to the bears. So obviously we had a pretty staunch pullback today in the markets. So the question that Tyler posed was, is this just another buy the dip opportunity, or are we starting to feel a little bit of heat? That remains to be seen ultimately. But if we start to, if this tends to be a little bit deeper pullback, kind of like we had in August or kind of like we had in October, then, there could be some more downside to here, which finally means, we've been in these scouting report meetings, for months and months now and having a hell of a time finding bear trades. Well, I think I found a couple of bear trades that were pretty awesome today. So let's throw up VFC. So VFC has had support basically right at the 80. It broke through there today. Okay. Right at, that's a little bit high, but that's okay. Right at the 80 level there, had support. There you go. Right about there. So the 80 level support there, we broke through that today. So I like this as a momentum trade to the downside. Now I realize that volatility is spiked up, but the reality is if this thing continues to fall, you're going to see volatility spike up even more. Again, obviously that's going to counter on the overall market as well. But what I was looking at here was a bear put spread, the 80-70 bear put spread. So what did I go out there? I went out to March. So I'm buying the 80 and I'm selling the 70. Now, if you look at that from an analyze tab standpoint, you're going to see there that you've got about at least well over 2-to-1 risk reward with this trade there. And again, like I said, I realize the volatility is spiked up a little bit here, but I really like this 2-to-1 risk reward. And when it breaks levels, round numbers like 80, plus it's got a little bit of free air there below 80. I think it can get to 70 before.
Yeah, not much in the way of the support, right, on the daily chart.
There really isn't. And so with this breaking down below there, like I said, you may get a slowdown at 75, but I think ultimately this thing can get to 70. And you can kind of see that it was a head and shoulders pattern there, and it's breaking down from there. So I really like this to the downside.
No, I can see it. I mean, listen, open question. Bears have had a tough year for the last calendar year, ever since the March lows. It seems like nothing ever goes down. Do you think bearish trading is back maybe a little bit, with the exclusion of shorting GameStop, right?
Well, so, we were talking about this in the pregame there. The intraday volatility has picked up in the last couple of weeks. If you've been watching the SPY and the overall indexes, the intraday volatility has picked up, and that usually gives me, I don't know if it's my spidey senses or just from experience or whatever, that always makes me start to be a little bit cautious about going, aggressively long. And so I've kind of felt like that we were due for something. I don't know that it's going to be a massive pullback or anything. I just felt like we were a little bit overcooked and we needed a little pullback in the overall indexes. And I think we got a little bit of that today. Now, where it goes from here, I think Tyler made a great point. It could just, be another buying the dip opportunity. But if it's not, I think you should be prepared both ways. And that's why we do the scouting reports the way we do on tackle trading. We try to get both sides of the coin. I think the bears maybe got a little bit edge right now, at least today and maybe going a little bit forward. So
now let's see if your joke has a little bit of edge.
I don't know. That last one was pretty edgy, but I'll try my best here. I'm sure my wife has been putting glue on all my weapons collection. She denies it, but I'm sticking to my guns.
Solid. Listen, so that's a good, listen, that came back to the realm of normal after, your dark, side. Tyler, you're up. Round 3.
All right. I'm going to go with Netflix. I'm going to stick with my credit spreads. I did like that VFC pick. It's been hard for me to find good bear setups.
Well,
That
and
was a
I
good
also
one.
like it. I didn't even say it, but I like it. Consumer staples were weak heading into today, right? Like,
Yeah.
So, yeah. I mean, the young kids aren't going to be rushing into consumer staple stocks at the top of the chart anytime soon.
Yeah, indeed.
They're not.
Okay.
They're not going to have any money left after GameStop craters anyway, so they won't be rushing into the consumer staples. But
There
anyway,
you go.
I digress.
I like, I've been waiting for Netflix. It had a retracement, could have bounced, didn't, got smoked today. Essentially has come close now to filling its earnings gap. And you have just a slew of potential support levels here. 200-day moving average, gap fill, 50-day moving average, prior pivot lows. This entire major support around 465, 475. And you had a little bump in volatility in this thing today. So I'm looking for this to bottom out, or looking for signs of it. But quite frankly, Mark, if tomorrow this has another day like today, I'd still be looking to buy this dip at some point, if for no other reason than where it started from, right? I mean, you're not going to go from 600 to 400 in a straight line when the reason you jumped to 600 is they liked what you had to say about your fundamentals. So I'm looking at this dip as a buying opportunity. The more oversold it gets, the more I like it. But really, it's this gap fill that I think becomes interesting. So went out to March and was looking at a bull put. We're below 450. Okay, so I got a pretty good margin of error. And the one that I was anchoring on was the 445, which is a 15 delta, so 85% probability of profit. 445, 440. You're getting almost $1 for this.
Wow.
If I wanted to go as far as I could to get 50 cents, actually, it might be bid-ask spread on that to be fair. I think bid-ask spreads are jacking it up a little bit, but so we'll see when they tighten up tomorrow. I'm confident you could at least get 50 cents. Let's put it that way. So 10 to 20% return, we'll say 445, 440. A lot of technical support levels, good ROI, plenty of room. I mean, this thing really, really would have to get beat down to get down there. So that's my pick.
No, that's a big credit, right? Multiple support levels. You got a big. I mean, this thing has all of the prerequisites. It's a good pick. I like. I mean, listen, you've given me a lot, both of you, to think about. I'm looking at these things on my notepad, and I love breaking out the Trade Masters notepad as I like take notes and gap fill and this and that, so I can go tonight and have an adult beverage and look these over. Now we'll see how bad the joke is right here, and how strong of adult beverage I need to drink if I need to forget it. Let's see what you got.
My friend gave me his EpiPen as he was dying.
He gave you his what?
His EpiPen. That's the
Epinephrine.
Yes. It seemed very important to him that I have it.
I don't know what the word is you said.
You're gonna need whiskey.
Fine, let me give you another one. I got plenty. Let me give you another one. Where did Sally go during the bombing?
Where did Sally go during the bombing?
Everywhere.
And you said I was dark.
Oh my gosh. Listen. These jokes today brought to you by a bear day in the market. I mean, I guess, on when volatility is the third highest jump in the VIX, and I found that a fascinating stats ever. Jokes get a little dark around trader circles. I like that joke though a lot. Round 4, Greg. What do you got?
All right. I'm going to let you choose, big guy. I've got another consumer staples bear put, or a bear play, I should say, or I've got a bull play. Which do you want, bull or bear?
I want the consumer staples bear play.
All right. Let's go take a look at Proctor and Gamble.
Oh.
Oh yeah. Oh yeah. So that's a 200-day moving average you've got there. Just broke a level of support there at the $1.30 there. This is a momentum play all the way down. The trade I had on this one was the 130, buy the 130 put, sell the 125. Sorry, yeah, sell the 125 bear put. I'll have to get you to pull up that trade tab to see. It was again at least a 2-to-1. It was even more than 2-to-1 on this one as well when I looked at it. So buy the 130, sell the 125. And if
Really, you're getting
for $2.
2 to win, make 3, huh?
Yeah. So you're spending 2 to make what's the on the left hand side there, Ty?
3. It's 3.
3. 2 to 3. Yeah.
Yep.
So with this one here, if you didn't want to let it run to fruition, it's just totally cool. And you picked, if you look at the chart, you can pick a spot where you could put a stop in on this one here. If it got above, say that, I think it's about a 132 there.
Did you go March options there?
Yes, I did. Yeah, I believe that was March options. So if you get above the 132, 133, you could put a stop loss in to close out the trade. And then if it gets down to the 125 or 120, obviously your return's going to be juiced. Right?
No, I like what you're doing on these bear trades because you're using bear put spreads, which reduces the volatility kicks up, right? But these spreads help you reduce that volatility and also give you reasonable risk reward. It's like going short right now in this market scares anyone after the last few days, but this isn't going short. This is using a bearish strategy to attack downward momentum with a fixed risk. What's the most you can lose on this trade, Greg?
$200.
$200. You can't lose 1,000. You can't lose it. You can lose $200 per contract. And right. You were talking about ways to mitigate where loss. Would you get out? How would you mitigate the loss?
Yeah, so you can put a stop loss on the whole trade. Like I said, if it popped back up above that high right there, say 133, if you look at that on the risk graph there, it's only where's the 133 there? It's like $70, right? So if you got a potential for 300 and you get out at a $70 loss, that's huge. That's big money, right? So you've got an opportunity in there to even take a trade that has fixed risk and even trim it down even further. Right. So you've really put yourself in a good position. And as you guys saw there, we're breaking major support, nice round number. And that was a very aggressive candle today. And you can kind of see how it's all, rounded over. It feels like it's ready for at least another leg down. And really that 125 that you're looking at, that's a first target. Looking at the chart, I think you could get to 120 pretty easily as well.
I really like that trade. I will be taking that trade 100% guaranteed. I like it. I like it a lot. I like the time you have in it too. It's a nice, I like that trade. How many times do I got to say I like that trade? Let's see if I like the joke.
All right. To this day, the boy that used to bully me at school still takes my lunch money. On the plus side, he makes great Subway sandwiches.
Listen, it is all dark. Listen, I look outside, it's cloudy. It's dark in this room though tonight.
That was good.
Tyler, round 4.
That's good. All right. Do you know who held up well today was the energy sector?
That sounded like the start of one of your jokes. You know who held up well today?
Yeah. No, it wasn't one of my jokes. Energy held up well. Crude oil is still holding up above its 20 MA. I really like the relative strength. They got whacked at the end of the day, at the very end, but all in all, you saw some relative strength. And energy's been one of the hotter sectors of late. I think there's a lot of ways you could play this, but I'm going to go for the big kahuna, Exxon Mobil. Got a nice little bull retracement here. Slides below the 20 MA. I think that's fine given the circumstances. You can go really far out of the money, sell some puts, get some really good premium. This pays a huge dividend. And I feel like if they defended the dividend through thick and thin last year with oil prices back up at 50, 60 bucks, I think there's much less of a risk for that going forward. It could be wrong. But all in all, I just like selling puts. I'm not afraid of holding it into earnings. It doesn't move on earnings, or it hasn't moved on earnings in forever. And you can get really far out of the money. So I was looking at the March 37.50 strike. The delta is 14. So you got about an 85, 86% probability of profit. You're getting 67 bucks. Your margin requirement is 375. So you're about an 18% return. If you get assigned, you're long the stock around $37, and that gets you a dividend yield of about 9%. And I think you could sell covered calls at that point, lower your basis. Probably wouldn't pull the trigger unless we get an update. And quite honestly, the lower this goes, the more I like it. So, but I think it's dropped enough where if it starts to pop, I could pull the trigger here.
Yeah, I mean, listen, I mean, sometimes you get opportunities, right? Because oil was doing a natural retracement, then volatility's picked up a little bit this week, gets covered down, you get bigger premiums. I like an oil play. Go pick your one. I like it a lot. I mean, it's nice, solid defensive play, I think, in this market. I think it's a really good play. I don't know if your joke's going to be really good, though, Tyler.
What did the Pirates say when you turned 80? Hi, matey.
That's one I can tell my daughter.
Good dad joke right there.
I think that's the first joke tonight I can tell my daughter, and I think she's gonna like that one. So I'll give you bonus points for that one. Last round, Greg. Last round. So
All right.
whatever your best pick is remaining on your board.
All right. Well, like I said, I got a bull pick actually, but it's I brought this one to the table. It's PBCT. I brought this to the table for our friends that don't have massive accounts. This is just strictly a stock play with a high base pattern here, even with all the wins against us in the bullish market. This thing here, if you look at the bid ask, looks like it's going to pop tomorrow. I like it. I like it above all this noise here. So like above 1470, 1480 there. Just strictly a quick stock play. You can see that this thing has a personality of bumping and then going sideways, bumping and then going sideways. I'm looking for that extra bump there. Again, past earnings, so we don't need to deal with that. And if you look at these last two breakouts, look at the size of the candles on these things. This thing tends to trend sideways, and then it gets a big old pop. So this has a personality where it likes to build up a bunch of energy and then kind of explode a little bit. Now, this is in the financial sector, so what I would mention would before I would get too crazy on this, I would be checking out XLF to make sure that it's making a turn, because it's actually at a pullback too. If you see it start to confirm to the upside, then I would be watching this one and putting an order in to get in. Like I said, very simple stock play. Put in a target, put in an exit, and like a stop loss, and position size properly. I think you're going to get another pop like we've seen the last two times.
Yeah, I mean that makes a lot. I mean that makes a lot of sense. And maybe that pop comes this week. Maybe it comes this month. Who knows? It can trade sideways for a while. Financials are going to have a good year, and I like how it held up today. I like, it feels like the market's holding it back. The market's holding it back. I like that play a lot. Nice little defensive play on a breakout. It's not even defensive play, but a defensive area of the market, an area of the market I like a lot. You wait for a breakout. Where would you buy it on a pullback is my question.
Well, see, when you get caught in these ranges here, basically, I'd be looking at, say, just below 14 there. Like if it's gonna channel in this range, which it has basically for the last couple of weeks, I'd be looking at just below 14 there. If it bounces off the, say, 1390 and you get a confirmation of the upside, you could buy it back in a retracement there. What I would do in that case, if I were doing a retracement with this, I would be looking at legging in. I would do a part position going into the retracement. Then if I get that breakout of the top, I'd be more than happy to add some more shares to it.
Like average up to it. Yeah, makes a lot of sense. All right. Yeah. Let's say if your joke makes a lot of sense.
All right. I called my wife and told her that I pick up pizza and Coke on the way back from work, but it seems she still wasn't happy. She still regrets letting me name the kids.
It so makes me want to have a third child and name it Domino.
Greg's bringing it tonight on the joke. That was good.
Best joke night ever on Trade Masters tonight. I officially declare. Tyler, round 5, last pick. What do you got? Best pick.
Wouldn't it be nice if you could get in a time machine, go back pre November 9th? I think that was the day everything exploded on the Pfizer
Yeah,
vaccine
I'd
news.
like to go back then.
Go back there and go buy financials back where they were before then. I'm gonna do that. Okay.
But I
I'm gonna
can't, Tyler. There's no way.
No, I'm gonna show you. Now the market may not give you the opportunity, but you'll get paid if it doesn't do that. Okay. Mark, I was looking at the out of the money puts in XLF, which is the financial sector. I got to be honest. I only had 4 picks tonight. So I was listening carefully, and I heard you tell Greg that financials are in for a banner year. So I thought, okay, well, let's go look at this dip in XLF. I've been wanting to buy the dip. Didn't think
You
it
know
would
what?
pull back.
That is, Greg. That's Tyler knowing he's a little behind in the game, and he's like, "All right, I gotta get some financials to see if I have a chance to make this close, pull up an upset."
Indeed. Didn't think XLF would pull back as much as it did, but it's kissing the 50-day moving average. If you look back at where the gap was at $26, $25, I feel like if I can sell a put down around 25 or 26, heck, if they want to smash this thing down to 25 again, I think I'm a willing buyer down there. And vol did bump today on this, so out of the money puts got juice like everything else. You go out to March.
Because you normally don't get anything for an out of the money put.
Not an XLF.
Not on XLF. It's very hard. I mean, whenever I go to look, I'm getting 8 cents or 7 cents.
So I'm going to give you a twofer here. You could do the 26 strike, get yourself 47 cents. And I bet market sells off a little overnight. We gap down tomorrow. I bet you get 50 cents. So you're making, I'll go with the 47 on 288. You're making a nice little 16% return. You never get a 16% return in XLF with an 80% probability. You just never do. And look, if you get a sign, you're long about 25.50. Like I said, this effectively has to erase everything post the vaccine news, which would be dreadful, but you got to wonder if we sell off that much, what comes next. I suspect a big bounce. If you really wanted to go to 25, that would get you.
And you use March options on those, right?
Yeah, all March monthly for all of today's examples. You really want to go further, you could maybe get 30 plus cents on the 25 strike. You're about a 12, 13% return on that as well. I like both of them. I'd probably go the 26 just because I think the margin of error is already good enough. But either way, 26, 25 strike, they both look tasty to me.
They do look tasty, don't they? Is your joke going to be tasty?
Oh, we shall see.
He's looking for his 5th joke. He was not prepared for round 5, was he?
How does Moses take his coffee? He brews it. Hebrews it.
Oh, he Hebrews it. Oh, that's actually good. That's my bad. That's a funny joke, actually. I like that one a lot. I didn't get, yeah.
I can tell it's super funny when you have to explain it's not funny versus laughing.
No, that was my bad because the Hebrew, that was my bad. That's not a bad joke. Listen, this was best joke night ever. I gotta go to the tally here. I was keeping score on these things because there's a lot of good stuff here. I mean, Tyler, I like the Netflix pick a lot. The FCX and XOM, those are just solid sell-off, low, good quality companies. The SPY thing looks really juicy later. XLF, I mean, a lot of this speaks my language, right? I love some of the bearish picks Greg brought, though. I like the nice, solid PBCT play in financials, nice credit spreads. But on the strength of those bear consumer staple picks in a very close, listen, the battle between you two is always going to be, Tyler, I'm afraid to say Greg is 2-0 against you now. Greg, solid job. But Tyler, amazing job on these. But Greg, you're the victor tonight on Trade Masters.
Thanks, sir. I'd like to say to my friend Tyler, we were friends last night. We were foes today. We're friends again now, as far as I'm
Hey, screw you, Greg. Screw you, Greg.
Listen, Greg, final words to traders out there on a volatile day.
On a volatile day, you know what? Just be active, be aware. Be cautious. There's 252 trading days in a year. There's always opportunities to make money. Just be cautious. You know what I mean? Like if you start to feel, like I've felt for the last couple of weeks with the intraday volatility picking up, if you start to feel that things maybe aren't right, you know what? Cash is a position. It's a good position to have, right? So if you need to pull back, if you need to reduce some risk or close, half your position or something, make yourself feel comfortable in the markets. You'll always do better that way. And so, like I said, caution is a nice way to go. You don't always have to swing for the fences. I find when I do swing too hard for the fences, it just doesn't turn out the way you expect it to in this market. So,
can I add one thing to that?
Yes, of course.
When the VIX is up at 30 as well, I mean, that's the other thing is I'm sorry, almost 40. You're not going to, that quiet grind higher we've seen in the market, that's kind of over in the short term. You're going to see some pretty big swings when you get the VIX up near 40 like this. So just be aware that this is like get your big boy pants on with respect to the volatility considerations. I'm with Greg. For me personally, this is a minimize damage environment versus swing for the fence. I totally agree.
No, I mean, and that's the thing, is we could do a whole class, right? I spend a lot of my day, I'm sure you guys spend a lot of your day, minimize damage, protect a lot of the product, because it's been a good stretch, right? And there'll be another good stretch around the corner. And there's ways to play volatility, and some of the ways you showed tonight, I think, are really, really good. That is it tonight for Trade Masters. Thank you, everyone. Once again, if you're not a member of Tackle Trading, give us a shot. 15-day free trial. We talk about all kinds of stuff, all kinds of different strategies. Go to the store tab, fill out the free trial link, or you can email me at team@tackletrading. Listen, we love you all. We do. We love doing this show. We love doing all of our shows. Tyler for Tackle Trading members, Step System Mastermind in 40 minutes. You can go to the calendar, the events tab on tackletrading.com to get the link there. But Tyler, Greg, thank you very much. And everyone, we love you. Good trading the rest of the week.
Thanks, Ty. Thanks, Mark.